Hey everybody, it's Tradiest Trades here. It's another week and another edition of the Market Matrix. We're going to take a look at gold, the dollar index, crude oil, and the Nasdaq from a strictly price action perspective. Give you my trading ideas for the next week. Quick disclaimer: this is not trading advice. Should not be construed as any sort of recommendation to buy or sell anything. There's real risk involved in trading, and any decisions that you make are your own and not my responsibility. So with that out of the way, and you assuming that risk by watching this video, we're ready to go. So here, starting with gold on the monthly time frame, what's interesting about gold is last week we confirmed this monthly swing low. So what is this? This is a higher low in an already otherwise dominant uptrend on the 52 period moving average. So we got an uptrend, underlying dominant uptrend, and now we just made a higher low in that uptrend. So what I'm looking for is for gold to continue trading into all-time highs. The extension of this monthly swing high to swing low extended up is right around 3,000, specifically 3,062.1. So what this means is we put in a swing low on the monthly. The momentum is bullish in alignment with the trend. The short-term monthly structure is bullish, so that means daily ducks in a barrel longs, so oversold and undervalued pullbacks on the daily time frame are going to be wonderful opportunities to go long until the bears show up and tell us it's time to be bearish based on the monthly chart, which is not yet. On the weekly time frame, what do we see? Well, we know that over the last few weeks I've been bullish and taking longs. I'm still long, actually, close to my second profit target on gold. And we see we're in the midst of a intermediate term weekly upswing. So this low here has higher lows on either side of it. So this up move is an intermediate term move. So what we also see is we put in a higher high on the weekly as well. So basically, I'm bullish until the bears tell us it's time to be bearish. So what this means, since my weekly is in bullish flow and the underlying trend is bullish, all signs point towards 4-hour ducks in a barrel longs being the highest probability opportunities for gold until the bears tell us it's time to be bearish. And what would tell me it's time to be bearish? Well, if we open this week and just trade down to last week's low without taking out this week's high, that would be a confirmation of a short-term swing high. And at which point then shorts may be the higher probability trade, but the real high probability trade would be to wait for a higher low on the weekly to form somewhere here and then continue up. So that's what I'm looking for on gold. Basically this week, still looking for 4-hour ducks in a barrel longs until bears give me a reason to change my mind. On the daily, you'll know that for the last few weeks I've been bullish. Right back here, I basically said it's time to keep going. It's time to go long on daily confirmed swing lows on the short term. So we see here the green line is the intermediate term swings in the marketplace. So we're in an intermediate term upswing. So basically, again, just waiting for confirmed higher lows. So every time these lows were confirmed here, those were great trade opportunities, either to just market enter at that level with a stop below that low, or going down onto the H1 time frame and hunting ducks in a barrel long setups. So basically, for this week, again, watching the market structure on the daily, does it remain bullish? Do we come down and make a higher low here? A confirmation of a higher low here will be a great opportunity to look for H1 ducks in the barrel longs and look for a continuation of the trend. Now, if the market structure shifts, of course, then you shift to be bearish. Like if we had a full-on Williams true trend change and then we started putting in lower highs, well, then we're going to be looking for ducks in the barrel shorts. But as of now, the market structure going into next week, the market structure is still bullish, which just basically means let's look for longs until the bears give us reason to look for shorts. Heading over to the dollar, the weekly time frame last week, we confirmed this higher, or the short-term higher high. So right now the momentum is to the downside. So what we see is an underlying upsloping 52 period moving average. So the dominant underlying trend is up. Market structure, short-term market structure on the weekly is still bullish. We're making higher highs and higher lows. So now the question is, if this dollar is to remain bullish, where do we put in the higher low? And that will present us with the highest probability H4 trade opportunities would be once there's a higher low. However, right now, based on the short-term swing high being put in, it's basically means this week I'll be looking for 4-hour shorts on the US dollar, which would mean 4-hour longs on the euro. So until we put in a confirmed higher low, the highest probability trades this week are the H4 shorts. Bearing in mind that taking short trades right now is out of sync with the weekly short-term market structure, and it's out of sync with the upsloping 52 period moving average. So not expecting as much out of those trades as we would if we were looking for longs. Okay. Now on the daily, last week we confirmed a intermediate term high when we took out this low and confirmed this lower swing high. So we are in an intermediate term downswing right now, which basically means right now the market structure is bearish. If we pull back and we confirm a lower high, that's going to present us with high probability opportunities in the H1 timeframe, looking for H1 ducks in a barrel shorts. And basically, just like gold the last few weeks, just watch the market structure. If it stays bearish, then all you're looking for is H1 shorts. And the highest probability trades are going to come once these swing highs are confirmed. So don't look for H1 shorts when you're in a H1 or in a daily upswing. Wait for the downswing, the high, to be confirmed, to then go in on that time frame and look for those entries. Okay, so that's what I'm looking for on the dollar this week. Bearish until the bulls show up and tell us it's time to be bullish. Heading on over to crude oil. Right now, the momentum is clearly to the downside. Now, the weekly market structure is bullish. Question is, where do we put in the higher low? So if this week opened on oil and just traded up to last week's high without trading down to its low here, that would confirm a short-term weekly higher low, and in which case 4-hour ducks and barrel longs would become high probability, and I'd be looking for a continuation of the trend, taking out this high and continuing higher. But as of right now, the momentum is down. So if we trade down to last week's low, then we're not putting in a swing low yet, and 4-hour ducks in a barrel shorts would be the highest probability trade, bearing in mind that that would be out of sync with the weekly short-term market structure. So don't expect as much out of those shorts, basically. Daily time frame, we've had one big swing down. We haven't had any swings throughout this whole multi-day move down here. So what I'm looking for is where can we put in the higher low? And then I really want to watch the structure. Like technically, if we put in a low anywhere before this low, that will be a higher low, and that will give us the green light to search for H1 longs on the ducks in a barrel strategy. And target would be all the way up to around 87, which would be an extension of this current short-term daily price swing. So if we do confirm a swing low somewhere, H1 ducks in the barrel longs are on the table, which will be in sync with the short-term market structure and this slightly upsloping, although slightly going a little bit flat, 52 period moving average. So basically looking for the trend change, the confirmed higher low on the crude oil contract here on the daily in order to look for H1 ducks in the barrel longs. And that's starting the week. Anyways, now what happens if we go like this and then we put in a lower high? Well, that's not good for the bulls. That would confirm this as an intermediate term high, and then the momentum would be to the downside, and shorts would likely become the higher probability trade. But this video is being recorded on January 26th, which is basically giving you my insight into the market to start the week. You got to really remember that things change quickly in the charts. I'm not married to these ideas. I'm letting the price action tell me what I should be looking to do, and reacting and responding to those changes in the price. The idea I have at the start of the week isn't necessarily the idea I'll have to trade by the end of the week. You do not want to be married to your ideas. You need to be able to quickly let go of them and move on to the next idea. So over to Nasdaq. Last week, we got a confirmed higher low. So what do we have here? Dominant underlying uptrend, upsloping 52 period moving average, bullish short-term weekly market structure. Now, what have we just done? We put in a higher low in a dominant uptrend. So what I'm looking for is for the Nasdaq to continue, make a higher high. The extension of this swing down is up to 24,157.50. So basically what this means is H4 ducks in a barrel longs are the high probability trades for me heading into this week with Nasdaq. Will be interesting to see what happens with all this DeepSeek stuff that's in the news. China releasing an open source and potentially more powerful AI than chat GPT, and it's free, and they're trying to commoditize AI essentially and make it kind of like running water or electricity, which is really fascinating. It'll be interesting to see how it impacts stocks like Nvidia and all these stocks that are heavy into AI spending and their valuation based on the future of AI. But that's it here on the weekly on the NASDAQ. Now heading over to the daily. So what we see is we had a bullish Williams true trend change. So basically what I'm waiting for, I want to see a swing high put in. And then the high probability trade for me is going to come in once we confirm a higher low. And once that higher low confirms, that presents us with the high probability opportunities to take H1 longs on the ducks in a barrel strategy. So that's it, everybody. Just stay bullish until the bears show you reasons to be bearish, and stay bearish until the bulls give you reasons to be bullish. And that's pretty simple, and that's it. If you have any questions about this method of analyzing the markets, you can shoot me a message. My email is tradiustrades@gmail.com, and look forward to connecting with you, and have yourself a great week.